Trump's trade war with China just escalated dramatically, but here's the twist: Indian companies might actually benefit. Let's break down how the US China tariff clash could open new doors for India and how Chinese firms are suddenly warming up to Indian rules they once resisted. US President Donald Trump this week raised tariffs on China to a staggering 245%, calling out Beijing's retaliatory policies. China had earlier slapped 125% tariffs on American goods, but has now said it is not interested in playing what it calls the tariff numbers game. Beijing also filed a fresh complaint with the World Trade Organization, accusing the US of violating global trade rules and expressing grave concern. So, how does India come into the picture? According to an Economic Times report, some Chinese companies are now showing willingness to accept India's regulations, including minority stakes in joint ventures, a major reversal from their earlier stand. Companies like Shanghai Highly Group and Haier are reportedly softening their positions as fears grow that their access to the US market may be cut off. Shanghai Highly, one of China's largest compressor manufacturers, is now in talks with Tata owned Voltas for a joint manufacturing venture. Earlier, the Indian government had blocked a JV proposal from Shanghai Highly because the firm wanted a 60% stake, majority control. Now, the company is open to holding a minority stake and is even open to sharing technology with Indian partners. Meanwhile, Haier, a popular consumer electronics brand, is reportedly in talks to sell a majority stake in its Indian operations. As per Business Today, Haier may offload 51 to 55%, a big shift from its previous plan to sell only up to 26%. The company is speaking to Indian businesses and private equity funds to close the deal. It's not just ownership that's changing, prices too. According to media reports, Chinese electronics component makers are now offering up to 5% discounts to Indian companies. This is significant given that the electronics industry runs on thin margins of 4 to 7%. Indian companies might pass some of those discounts to consumers, making gadgets more affordable. Worth noting, three-fourths of all electronic components used in India still come from China. In fact, as per Commerce Ministry data, India's imports from China hit a record high of $113.45 billion last year. In 2024, the US imported $127.06 billion worth of electronics from China. Experts believe that Chinese companies' attitude toward India has shifted significantly. The Commerce Ministry says it's closely monitoring import trends, both weekly and monthly, to check for any unusual surges in specific commodities or from specific countries. If such a surge is noticed, India could impose anti dumping or safeguard duties. The ministry warned that rising costs in the US may prompt exporters from China, Vietnam, and Indonesia to divert goods to India, increasing the risk of merchandise dumping. A recent government assessment echoed this, noting the risk of a surge in diverted goods entering India amid rising global trade tensions. As Trump pushes harder on China, India might be entering a rare sweet spot, gaining leverage, investments, and maybe even cheaper gadgets. But with shifting global tides, all eyes are on how long this window will stay open.